Hello, good morning, everybody. How are you all doing this morning? Thank God it's Friday. If you can hear me clearly and can see my screen, kindly type in hi in the comment section. Let's get this session started by confirming we are all on the same page. I need someone to confirm to me that he or she can hear me and can see my screen. Hey, Carrie, happy Friday to you. Thank you for that confirmation. Yankski, good morning. Thank you very much. Beautiful. So let's get the party started. So once again, I welcome you all to yet another beautiful session of Extreme Speed Live, hosted by my humble self, Sheriff Daramola. I shall be taking you on a trading journey where we shall be evaluating the charts. We are going to be identifying chart patterns, market structures, trend line patterns, reversal patterns, trend continuation patterns, and we shall be using all those parameters to decipher and determine where price action is going during the New York session. And if you have any pair or commodity you want us to look at, feel free to drop it in the comment section. So we are going to be deliberating on the pairs. We're going to start this today with the deliberation of the pairs we looked at yesterday, and the pairs we've been monitoring since the beginning of the week. After which we are going to be looking at random pairs. We are going to see if we are still having opportunities lining up for us today. But one thing I also want to say is this. Obviously, it's a Friday. That's the last trading day of the week. And it's always very important that we remain very cautious. I mean, conscious. Conscious. I mean, conscious. Because on this day, it's always a very sensitive day, as most people, most traders, most participants in the market will always want to take the profits they've actually made during the course of the week, quick take profits before the end of the day. And so this is going to reflect on the charts, as we might be seeing some strange patterns on Fridays. It's always usual that happens. So that's why we want to be very conscious today. And if we see opportunities, we will take them. However, if we don't, I'll be advising that we pass those trade. So let's start off today with the normal pair we normally take, which is the US oil. And let's see where we are at this point in time. So going into the chart right now, we have the US oil, the 1 hour time frame on our chart right now, and we had the perspective we were looking at for yesterday. During the course of yesterday's session, we were actually at around, hold on a second, let's identify that area we had. We are around this area yesterday. Remember, we are around this area. And we had two possible scenarios we were looking out for yesterday, where I made mention that we could be seeing a retest. Though the first one was a breakout of that structure, we're expecting price to do a breakout of that structure, after which we look forward to a retracement into the structure, probably into that key level we identify at $98, after which we look out for patterns to join the rally to the upside. So that did not happen. Then the other scenario we were looking out for was that price will probably respect this bearish trend line, and we could be seeing price come back to do a retest of this temporary bullish trend line here, the one on your screen with the green dotted line, or we could be seeing price come down to retest the major bullish trend line. So from the look of things, what we saw here was that price actually respected that bullish trend line, the temporary one, the green dotted line on your screen right here, and we saw price move up a little into the $98 mark area after it came back to do a second retest of that level, giving us multiple rejections of that level to give us a clue into a possible trend continuation. So we saw our price move right through the key level at $98 mark. If you are taking advantage of that move, kudos to you for identifying that opportunity. So we already have a scenario running for us at this point. So at least you should be in, if you are taking advantage of that move, you should be in around 100 pips here. And let's see how we intend taking advantage of further momentum here on during the New York session. So with the scenario we have here at this point in time, we can see that we have a demand structure here. That is, this area has been supporting price action in the last 12 to 15 hours. So we would like to label this area our demand zone at this point. Let's see if this zone is going to hold market structure for today, being the last trading day of the week. So let's see if this level is going to hold price action. So one thing I'll be saying here is that we are looking forward to this area holding a bullish momentum for us. So there is a likelihood that price would come back to retest the key level. If you look at the structure we have here around this area, we can see that we had this bearish impulsive move from here. Respecting that bearish trend line, price came into the structure. We had the first rejection, we had a second rejection of this trend line, and we saw our price break out of that structure. So what this looks like a reversal pattern, that is, and if we have a reversal pattern, we expect to see a neckline that should be guiding our actions going forward. And if we look left, we can see that we have a neckline right around the $97.50 mark, which I'm trying to connect here so we can have a visual understanding of what we're talking about here. So let's give this a purple, and so we have our neckline there. So we have a neckline right here. So I want to be deleting this key level at $98 mark as no longer relevant. So this is what we're going to be using going forward. So now, as we head into the New York session, we already identified a reversal pattern here on the 1 hour time frame. We have the double bottom structure. We have a breakout of that structure, that is the breakout of that neckline. So from a technical perspective, we expect price to do a comeback, to do a retest of the neckline, which might probably share a confluence with that bullish trend line, after which a pattern, a reversal pattern here, a double bottom structure, or an inverse head and shoulder pattern here on our lower time frame should give us further confirmation to join the rally to the upside from here. So if you are already in this trade, I will be suggesting that if price comes back into this area and gives us that pattern that supports a trend continuation here, you might want to add one more position to your trade. However, if you are yet to be in this trade at this point, then this is more or less an area where you want to be looking out for to take advantage of a trend continuation to the upside here. So that's the scenario we're looking out for. That's the first scenario we're looking out for. So what happens if price does not come back into the neckline at $97.50? What are we going to do? If price does not come back into that level, then this is what we plan to do here. So let me delete this first so that we can have a clear chart. So if price does not come back into the neckline, we'll understand that from a technical perspective. Normally, if we see a reversal pattern in form of a double bottom structure, we expect a breakout of structure, price come back to retest the neckline. However, this does not happen all the time. So if this does not happen, price does not come back to do a retest of the neckline, then what are we going to be looking out for? How do we intend taking advantage of a bullish opportunity? So one thing I'll be saying here is we should wait for price to break out of that bearish trend line. that is, we see a breakout of that trend line, that will give us a signal that we are having a bullish momentum. And one thing we want to be doing is to wait for price to come back and do a retest of that structure, that is the bearish trend line, after which you look out for patterns on lower time frame to join the trend continuation to the upside. So if you're already in this trade, as the trade moves to break out of the bearish trend line and price does a retest of structure and we see patterns that support the trend continuation around here, you want to add more position to your existing trade. So now, if price is going to break out of that structure, that is the bearish trend line we identified here, price to break out and retest, then we need to have a level that we want to be looking out for a retest of. And if we look left, we can see that we have a level around that area that has one point in time being a demand zone. We saw how it has been a demand zone before we saw the breakdown of structure. Then price came back to do a resistance area around that point as well. And also we had a resistance point, we had a demand zone here, we had a resistance point here, making that level a very, very significant area to look out for a retest of structure if price breaks out of that bearish trend line. So one thing we want to be doing now is to connect that level so that we can be using that as a yardstick if we see a breakout of that structure. So if we bring out our line chart at this point and run it through this level here, we have around the $98.50 mark. Yeah, I think $98.50 mark as an area we should be looking out for if price breaks out of that bearish trend line. So let's go back to our candle chart, and then we have here, very good, beautiful. So if we have a breakout of that structure, then price come back to do a retest of this level, should give us a potential opportunity to add more trade to this, more positions to our existing trade. However, if you're not in this trade, if price breaks out of that structure, we want to look to buy around this area. So that is the second scenario we are looking out for. And let's see how price action plays out during the New York session. Now, the third scenario is this. If at any point in time, price breaks below the neckline and even break below that bullish trend line into the demand zone, even break further than the demand zone, then a retest of the structure should give us a confirmation that price is actually going bearish. So one thing I'll be saying here is I will not be advising we take any bearish momentum here, because this bearish move can actually be a way of respecting the major bullish trend line we identified on the daily time frame, after which we might be seeing a trend continuation from there to the upside. So what's the bullish trend line here we're talking about? If you are with me yesterday, we identified this trend line yesterday. Let's go to the higher time frame so that we can see what I'm talking about at this point. So we can see here we identified that major bullish trend line here. We saw as soon as price respected that potential demand zone at around the $91 area, price had continued to find higher lows, and after connecting the series of higher lows at this point, we were able to identify that level as this major demand level, and also we're able to identify this temporary bullish trend line here. So that's how we got about this. So if we are going to see a breakdown of that demand zone, then definitely a retest of structure should probably send price right back into the major bullish trend line we identified here on the 4 hours time frame, after which we want to be looking for a trend continuation to the upside from there. So I'm not sure if this old formation is going to happen today, but let us just add this in mind that this is what our expectation is going to be like going forward. So let's go back to the 1 hour time frame where we are doing our analysis. So this is what we are looking out for. So we have 3 scenarios here that we're going to be looking out for. The first one is the breakout of the bearish trend line. A retest of structure should give you an opportunity to join the rally to the upside. And if you're already in this trade, a breakout retest of that structure should give you an opportunity to add one more position to your existing trade. And the other scenario I also mentioned here is if price comes down to do a retest of the neckline of that reversal pattern, we want to be looking to take advantage of a bullish momentum from here. And the third scenario is if price breaks below that neckline, that is even into the demand zone here, a retest of structure should give us a move to the downside. So if you're a counter trend trader, it might be something you want to be looking at, that is taking advantage of a retest of structure into the major demand zone area, which might dovetail to about 300 pips to catch there. But one thing I'll be saying here is I still see more of a bullish potential unless we see a breakdown of that bullish trend line. So I'm still seeing a bullish potential here on the US oil. So I'll be suggesting that we remain very patient and see how price is going to play out using those three scenarios we identified here. So most times I used to advise that you munch my screen. You can screenshot my screen so that you can use it as a reference point when you're about making your own individual decision. So if we are taking a buy on this one, where will our take profit target be at this point in time? Well, it's very simple. If we look left, we can see that we have a structure we can use to guide our actions, as in we have a supply niche around this area, and this area was broken by the sellers as well. And this area as well was at one point in time a demand structure for price action, and then we also have a supply niche around this area. So one thing this is telling us is that this area around this point is most appropriate for our take profit target zone. Sorry, that's too wide. Hold on a second. I'm sorry. That's too wide. So this area around this point appears to be most appropriate for our take profit target. So we have between the $102 area and the $105 area as an area to look out for as a take profit target zone, considering the structure we have here on the 1 hour time frame. So this is my expectation here during the for the New York session today. So let's see how price action plays out, and if you have any question whatsoever or you need further clarification regarding what I've just discussed so far, feel free to drop a comment or inquiry in the comment section, and I will be willing to be of help. So I'll be taking the next 10 to 15 seconds off to read the comments. If you have questions, let's see. John Chu 85 says is new here. All right, great. You're welcome on board. Glad to have you around, and I hope you stick with us at least throughout the session and continue to join us every day, 10 a.m. UTC time, 11 a.m. West African time. Then you want to invest in the forex in gold. Well, we're going to be looking at the gold. I hope you are a trader already. You've been trading before, and if you have been trading before, then definitely we are going to be looking at the gold as well. I think in the next couple of pairs we'll be looking at gold. We did something on gold yesterday, so we want to see how well we are doing on that. So I want you to stay tuned so that you don't miss out on that session on gold. All right, so good afternoon, Ponamaya. Okay, good afternoon to you. All right, good morning, 764-966. Hi, how are you? All right. CCIUSTA, I hope I correct that. I pronounced that correctly. You want us to do GBP card? Okay, we'll look at GBP card. I think we did something on GBP card yesterday as well, which didn't move as expected, but we will look at it and I'll share my opinion on that. So I penned that down already. Then Majsto, okay, hello, good morning. So in the absence of no questions, I guess we just have to move on to the next pair. So the next pair we are looking at as usual is the UK oil, which always share the same scenario. Most of the time share the same scenario with what we have on the US oil. And what do we have here on the UK oil? We saw our price has continued to reject our 107 level, and we are still here to take that bullish potential. We were expecting price to either come back here to do a retest of this bullish trend line yesterday, after which we are looking for a reversal pattern to take advantage of a trend continuation to the upside, which never happened. And we saw a significant breakdown of that bullish trend line, which is a huge breakdown during the early hours of today. That was a huge engulfing candle that took out all the buying positions around this area. And one thing that is very, very interesting here is that the key level that we identified during the early days of this week at $104 mark appears to have held the price supported, as that engulfing candle was rejected at that point. And if we look closely into that structure around the $104 mark, we can see how we had multiple rejection of this level, which tells us how important that level is. So because of this, now what we are going to be looking for is to look out for patterns around that area during the New York session. So let's see what our expectations are going to be like. Now, if we look left, we look further left into, I think the first days of the month, the first week of this month, we saw how that same level at $104 has been a major determinant of price action in the past. We saw multiple rejection here between the 7th and 11th. That's within 4 days. We saw multiple rejection of that level before we saw that breakdown of structure. Then price came back around this area to do a rejection. We saw that was a demand zone at that point too as well. We saw a consolidation phase around this area, depicting the indecision that has gripped the market at that point in time. Then we also saw a demand niche around this area, which is also a support level that pushed price to the upside from here. So you will agree with me that this, with the information we just gathered now, it appears that the $104 mark appears to be a very, very significant level, as it continues to be a major determinant of price action. As whenever price action comes into that level, we either see that level being rejected by the buyers or broken to the downside by the sellers. But right now, in the early hours of today, in the last 4 hours now, we've seen how that level has continued to hold the activities of the participants in this market. So what I want to be looking out for at this point is to wait to see how this price is going to react to this level. And since I'm looking at a bullish potential for the week, since the week began, then we want to be looking forward to something like a reversal pattern around this area. It could be a double bottom structure that will push price to the upside from here, or it could be an inverse head and shoulder pattern. That is, we see the shoulder, we see the head, we see the right shoulder, then a breakout of structure giving us further confirmation, a retest of structure to join the rally to the upside from there. And if that happens, our take profit target zone still remains between the $110 mark and the $113 area, which will dovetail to, let's see how many pips that is. If price moved in our favor, that's around 700 pips to catch there if price moves in our favor. So one thing I will be saying at this point is that we need to be patient, we need to hold on, and let's see how price action is going to react with this level at $104 in the next couple of hours. And if we want to see things more clearly, let's go down to the 15 minutes time frame and let's see what is happening here. On the 15 minutes time frame, we can see that since price came into this area, hold on a second, since price came into this area, we saw that price continue to find higher highs and higher low, giving us a clue into possibility of a bullish potential from this level. So what I'll be saying here is that first of all, let me identify a bullish trend line here. After connecting the series of higher lows here, we will be having something like this. So let's bring out our candle chart to do some readjustments on this one. So we have something like this going forward. So what I'll be saying here is that we have an area right above the $104.20 mark, and that is, give me a moment, let me show you what I mean here. We have somewhere around here a breakout retest of that level should give us a further confirmation to join. So if we have a breakout above of this level and then a retest, are you seeing my screen clearly? Let me bold it. Let me bold this. Let me give this. Let me make this a little bit bigger so that we can see what I'm talking about here. So we have an area here at $104.20. So if we see a breakout of that level, that should give us a signal. As you can see, price has continued to find higher highs and higher lows. So, and I want to be seeing price continue to respect that bullish trend line I just identified here on the 15 minutes time frame. So if I see a breakout of the structure and price comes back to do a retest of this structure, and you can see the structure also shares a confluence with that bullish trend line we identified here, then we want to be taking advantage of a trend continuation to the upside from here. So most important thing here is that we want to be looking out for structure around this area that will support a trend continuation to the upside from here. So let's see what happens during the New York session. This is something that we want to be on standby so that we don't miss out on that opportunity when it finally comes. So that is my scenario here on the UkOil. So let's see how that plays out. And if price continues to rally to the downside from here, I guess we just have to pass this trade and let's see how price will react towards the end of the week. And by Monday, we shall be looking at what we have to now decide what we're going to be doing for next week. So that is that on the UkOil. If you have questions, feel free to drop a comment in the comment section and we shall be waiting to look at it. Any questions? WAC 2307, good morning to you. Glad to have you around. CJ Massis SC Master, hi everyone. Okay. Mason, good morning. Having a problem with account. Okay, someone will attend to you in a moment. $562 says he likes to use Gen. I don't understand what that means. Are you talking to me? $2307. Are you asking for my name? Sharif Daramola is my name. Sharif Daramola is my name. Sharif spelled as S-H-E-R-I-F-F. Okay. Okay, so in the absence of no questions, let's move on to the next pair. And the next pair we'll be deliberating on is the GBPUSD, I guess. We talked about the GBPUSD yesterday, and we're still expecting that bullish momentum on the GBPUSD. And one thing we shared, we were able to take profit here on GBPUSD 2 days ago. We took about 140 pips here on the GBPUSD as price action continues to respect that bullish trend line we identified at the beginning of this week. Now, with the structure we have here, yesterday we had a perspective we were looking out for. We were expecting price to come back into that bullish trend line so that we can join a trend continuation, which never happened. And one thing we saw that is very, very significant at this point is that we saw a break above of at a level that has been a supply niche for participants in the market. We can see that this level was broken out, taking away all the selling opportunities around that area. Now we have price come back down below that level. Let me share with you that level I was talking about. You can see in the past we have this level at around the 1.22 area, which has been a major determinant of price action as well. We can see this area was rejected by sellers or the later part of last month. We saw another rejection on the first week of the month as well. Then we saw multiple rejection of that same level sometime during this week. And if we look further into the past, we saw that area as well as being a supply niche for participants in the market, as price action was rejected by sellers at that point as well. And when we saw a breakout of that structure, we saw price come back into that same level to serve as a demand zone. So one thing you would agree with me with this information is that that area appears to be a very, very significant level that we could use to guide our action going forward. Now that we have a break above of that level, we have a breakout of that structure at this point. Hold on a second. Now that we have a breakout of that structure at this point, how do we intend to take advantage of this structure we have here? Now, let me see. If we look at, let me see what this is at this point. Let me see if we have a 127.2 from this area. Okay, great. We have a 127.2. So what I will be looking out for at this point is this. I want to see this as an impulsive move. The last time price respected that bullish trend line was here. This is the last time price respected that bullish trend line. Around here, price respected that bullish. That was the last time price respected that bullish trend line. And since then, we saw this move to the upside from here that came into the 1.2 to 400 or 500 area, approximately 500, I guess, 500 area approximately, after which we are seeing price come down from that level. So we don't know how far this is going to go. Is price still going to come down this far or come down this far, or are we going to be seeing a trend continuation from this area? That we are not sure of unless structures gives us a clue. So what we want to be doing here, I want to bring out my Fibonacci retracement tool so that I can identify the golden zone area of this impulsive move, which is always between the 50 and the 78.6% of the previous impulse leg. So if we bring out our Fibonacci retracement tool and run it through that impulse leg, what do we have here? We have around the 50 and the 78.6% as an area we want to be looking out for buying opportunity on the GBPUSD. So let's give this a yellow and let's label it buy zone so that we can okay. So we delete this Fibonacci retracement tool as it is no longer needed. So one thing I will be looking out for going into the New York section, I'm not sure if that's going to happen today, but if it does happen, if we see price come back into this buy zone around this area, what I want to be looking out for around this area is a reversal pattern. Whatever reversal pattern it might be, it could be your double bottom, it could be your inverse head and shoulder pattern, it could be whatever your wedge or pennant, whatever it is that comes up. I want to see price do a reversal pattern around this area, after which I want to join at the site of a breakout and retest of structure on lower time frame. So if that happens, this is how I intend moving on this one. So if at any point in time during the course of today's session, that is the New York session today, we see another breakout above the 1.215 to 1.22 area, if we see another retest of this area with patterns on lower time frame that supports a trend continuation, we want to add to our existing trade. So at this point in time, I'll be suggesting that our take profit target falls around that bearish trend line we identified on the daily time frame, which is around the 1.23 area, 1.235 area, at least for the meantime, as let's see how price action is going to relate with that level. So you'll be asking that which level is this bearish trend line. I will show you. I think we identified that on the daily time frame during the early days of this week. And what do we have? Okay, give me a moment. Let me Okay, so we have this bearish trend line that has been holding price action in the in a downtrend since the beginning of the year, and we saw our price appears to be moving in the direction of that trend line one more time, in the probably with the intention of retesting it and pushing price back down to the downside, or we might be having a break above of that structure to push price to the upside. We never can tell what happens, but for now we want our take profit target to be around that bearish trend line, and let's see how price action plays out from that point. So now this is the scenario we have in here, and the other scenario we might be saying, okay, fine, if price does not come back into that buy zone that we identified here, what do we do? Are we just going to miss that trade? Well, no, not really. We're not going to miss it. Most important thing is this. Now we have this impulsive move. We saw three engulfing candles that pushed price to the downside from 1.22 500 level, and this looks more like a breakout of that structure. We saw this is a breakout of that structure, and this appears to be something like a retest of that structure. One thing we want to be looking out for is confirmation here, and that confirmation could come in form of a reversal pattern. So if we see a reversal pattern here, then we want to join the rally to the upside from there. So if we see a reversal pattern around this area, we can join that rally from this area to the upside. However, if price comes into this level, we all know what we are looking out for. We are looking for a reversal pattern to join that trend to the upside. But if price does not come that far, then a reversal pattern here on lower time frame should give us a clue into the bullish potential that is unfolding before our highs. So let's scale down to a 15 minutes time frame. Let's see what's happening around that area. It looks more like let's look out for a reversal pattern here as well. It could be an inverse head and shoulder pattern, and it's looking like that is happening at the moment. You can see we saw the first low, and then price came here. Then we saw this might be a head, and we never can tell. Price will come back into this area. Price will come back down again, probably. I'm just projecting so that we get ourselves prepared, and we can have something like this. So that looks like more like an inverse head and shoulder pattern, but let's see if that is going to happen around here. So if we see a reversal pattern at this point, then we want to join the rally to the upside. So if we are joining the rally to the upside, what are we going to be looking at as a take profit target? I've already showed you where I'm looking at this bearish trend line zone area, which if we move from this area, we should be having around 150 pips to catch here. However, if price comes back down into this buy zone area, then we should be having around 200 to 250 pips to catch here. So patience is required at this point. Let's see how price action plays out, and then we want to join the rally from there. So buyers on the GBPUSD remains bullish going into the later part of the week. So I implore us to be on standby so that we catch that move when it finally happens. So if you have any question whatsoever, feel free to drop it in the comment section, and I will be willing to be of help. So any question? CC, I used that. I said, okay, GP card. All right. I said I would do that. I promised I would do that. Go on. Okay. 082 359. Good morning. Good morning, 359. How are you? Cisada 1975 is asking what bullish mean. Yeah, bullish means uptrend. It means that we are moving to the upside. Bullish means buy. Bullish means price is moving uptrend. Price is moving up. And if we are going bearish, price is moving down. So that's what it means. Bullish means up, bearish means down. 647, hello, good morning. 786, I love you too. 359, glad to hear you're doing well. Thank God it's Friday. Excuse me. So I guess we move on to the next pair from here. So let's move on to the next pair. The next pair we'll be deliberating on today will be the XAUUSD, that is the gold, which is one thing we shared yesterday. We were able to take advantage of that bullish momentum 2 days ago on gold. We made some profit on gold. We made around 2,300 pips on gold 2 days ago. And yesterday we had a scenario we were looking out for yesterday. And the scenario was that price is likely going to come back down to do a retest of our bullish trend line here, after which we're going to be looking for a trend continuation to the upside, which never happened. And one thing we are actually looking forward to, the other scenario, is that a break above of that level at $1,745 area, and a retest of that level should have given us further confirmation, which appears to have happened, but this doesn't look quite significant at the point in time. But if you are taking that move, kudos to you for identifying that opportunity. And remember, our long-term perspective take profit target was supposed to be at the $1,760 mark, which is right around that right around the bearish trend line we identified on the higher time frame, which appears to have been hit at this point. So we already have a take profit target on the long-term perspective here. Then now, going into the New York session today, how do we intend taking advantage of any bullish potential here? Well, the first thing I'll be saying here is this: we have a temporary bullish trend line that has been holding price action in the last 24 hours, which I was able to identify during our live session yesterday, this bullish trend line. So if we extend that bullish trend line into the future, this is what we have. Let me bring out my line chart so that I can. Okay, we have is in alignment. So we have the structure around here. So I want to see price. Actually, I want to see price come back to do a retest of this bullish trend line, after which I look out for reversal patterns on this trend line, leading to a break above of that bearish trend line. That's in fact a very strong signal that we are really going bullish. So if we now let us see a break above of that bearish trend line, then a retest of structure should give us confirmation to join the rally to the upside. That is a scenario we can be looking out for. And if price choose not to come back to retest that bullish trend line, then we want to wait for an outright breakout of that bearish trend line. You might be asking me, what bearish trend line is it talking about? Well, we actually identified this bearish trend line during the early days of this week. And for those who are not with us from the beginning, let's scale up to a higher time frame where we identified that bullish trend line. Well, the first trend line we identified was this one. The red dotted line on your screen was the first one we identified, as price action was respecting that trend line since the beginning of March. We can see how that bearish momentum has been respected. Then since the beginning of the since mid-June, we were able to identify this temporary bearish trend line. We saw this. You see how price respected that trend line multiple times before. Now price is right back at that trend line, this trend line I'm talking about here. Hold on. Oh, sorry about that. So what I'm looking out for at this point is this: how is price going to relate with that bearish trend line, the red dotted line on your screen? If you have the privilege, of actually screenshotting my screen, so that you can use it as a reference point when you're about making your own individual decision. So what I'm looking out for is, how is price going to relate with this level? How is it going to relate to this level? And this might take some couple of hours before we get that confirmation. So if we see a breakout of that level, then a retest of structure should give us further confirmation that we are going bullish. And if we are going bullish, remember, when we went on the daily time frame, we saw this bullish trend line that price action has been respecting since the beginning of the year, and we saw the breakout of that bullish trend line in the month of June. Sorry, in the beginning of the month of July, we saw the breakdown of that bullish trend line. And from a technical perspective, we all expect that if price breaks down or break out of a structure, we expect price to come back to do a retest of structure, after which we might be looking out for momentum in the direction of the proud leading price action, which is bearish in this scenario. However, if price comes back into this level, we don't know if a bearish momentum will actually happen, or we might be seeing a break above with the intention of doing a trend continuation to the upside. So these are the scenarios we are looking out for. So on this one, I'll be advising that we remain patient to see how price is going to relate with that bearish trend line we identified here. So for those who are taking advantage of that bullish momentum to this level, kudos to you. And one thing we want to be doing right now is to see how price is going to relate with this level, this bearish trend line. And one thing I want to be seeing is an outright breakout of that level for me to join the rally to the upside. A breakout, remember, we are not getting too excited at the sight of a signal. A breakout is just a signal. It doesn't mean that price is going up until we see price come back to do a retest of that bearish trend line or the bullish trend line. Here we look out for patterns on lower time frame that supports a trend continuation to the upside. Then we can now join the rally. And if that happens, we want to be aiming at around the $1,800 mark area, at least for now. That is where price was at the beginning of the month. Let's see if price is still going to go back into where it was at the beginning of the month. Let's see what happens. That will dovetail to how many pips if price continues in that direction. That's around 4,000 pips to catch if price moves in that direction. Now, the other scenario we want to be looking out for. The reason why I normally share two scenarios is this. Remember, I'm not going to be with you during the New York session. So we might have a projection before the New York session, and when the New York session starts, things might change. Structures might evolve into something else different from what we have discussed so far. And if that happens, you might be caught up in a dilemma where you don't know what to do. So that's why I try as much as possible to share with you different scenarios you can be looking out for. And if that happens, you'll be able to take advantage of that move when it finally suffices. So the other scenario I'm looking out for on the gold here is the possibility of a breakdown of this bullish trend line. So if we do have a breakdown of that bullish trend line, then I want you to have it in mind that we might be having a momentum shift. And this momentum shift could actually be a retracement of the previous impulse leg. So remember, we have an impulse leg here. And we all understand that after every impulse leg, price tends to do a retracement into the golden zone area, which is the area around the 50 and the 78.6% of the previous impulse leg, after which we'll be looking out for patterns that will support a trend continuation from there. So if a breakdown of that bullish trend line happens, then we want to wear our conscious cap, as we want to wait and see how price is going to react to that breakdown. So if we see a breakdown of that bullish trend line, price comes back to do a retest of either that bullish trend line or the bearish trend line here, you can see the Sherry confluence, then it's likely that price is going to go down to probably test that major bullish trend line we identified earlier this week, after which probably a trend continuation could happen from that point. So these are the scenarios we want to be looking out for. So if we see a breakdown of that structure, if you are a counter trend trader or a scalper, or you someone who trade on lower time frame, you might want to be taking advantage of that short-term trade. It's actually a counter trend trade. I don't feel comfortable taking counter trend trades for me personally, but if you are comfortable taking it, you can be looking forward to at least a minimum of 2,000 pips to catch here. At least this might be a retracement phase of that impulse leg. So if the retracement phase completes at a reversal pattern, then I want to join that bullish momentum at the site of a reversal pattern around this area. So this is my perspective here on the gold. My perspective on the gold still remains bullish. And if I see a breakdown of that bullish trend line, I want to wait for that retracement phase to end before I join the rally. But if you are comfortable with taking a counter trend, if you're a counter trend trader or you are someone who trades on a lower time frame, you might want to catch those few pips if price moves in the form of a retracement of that impulse leg. So this is my scenario here on the gold. If you have any question whatsoever, or you need further clarification in what I have discussed so far, feel free to drop a comment in the comment section, and I will be willing to be of help in that regard. So I'll be taking the between 10 to 15 seconds off to look at the charts and see if you have any question whatsoever in that regard. So 647, how are you? Good morning. 786, love you too. 359, glad to hear that you're good. Melk Zeron, good morning. 610, good. 6466, hi. Okay, great. Yes, let's make money. Yes, that's why we're here. YS, yes, one. Good work. Okay. I hope that's a compliment. D no says thanks. Okay, you're welcome. All right. So I think we just have to move on to the next pair. We have 5 more minutes left for us. How time flies. Wow. What can we look at? I wanted to also look at the USTech before, and someone was asking us to do GBP card. I think we just have to do GBP card and then call it a day. Let's see. CC High Uster wants us to do GBP card. Let's do GBP card and let's call it a day from there. So on the GBP card, yesterday we were expecting price to do a bearish momentum, which never happened, and it was painful. I actually I told you I was in profit yesterday when I took the trade, and I moved my stop loss to break even. Unfortunately, I got taken out at break even on this one, and we didn't actually see that further confirmation of this bullish trend line that will give us that breakdown retest of structure to join the decline to the downside from here as price continue to trend on the upper side of the bearish trend line. Let's go up a little bit to the 4 hours time frame to show you what I was actually expecting, why I was expecting that bias during the course of yesterday. The first thing we observed on the higher time frame is that price action has been on a bearish move, and even in the last 3 months we've seen our price has continued to find lower lows and lower highs. You can see we have the lower low here, we have the lower high at this point, multiple rejection of that bearish trend line, pushing price back into the demand zone that was tested during the month of June, and we saw multiple rejection around this area, which led into a consolidation phase, giving us a clue into the indecision in the market at that particular point in time before we saw the final breakdown of that level during the midday of the month of July. Now, price was caught within a consolidation phase during this period, and it has been juxtaposing between the area that was formerly a demand zone and the 1.53500 level. So for me at this point, price has been oscillating between these two levels, between here, hold on a second, let's identify this together. So between this level and let me give this a purple. I prefer giving it something different. So we have this level here, and we also have this level around the previous demand zone here. So we were in a channel for over 2 weeks. Yes, over 2 weeks we were in a channel now, and the reason why I actually was thinking of a sell opportunity yesterday was because of the way price action was relating with the resistance level of this bearish trend line. As you can see how price has been related with that level, we can see we had multiple sharp rejection of that level in the last 72 hours. We saw multiple rejection of that level, giving me a clue into a possible potential of a selling advantage. However, that did not happen. We saw price come back into our entry point, and the way things are looking at this point, price is right above that bearish trend line. So what I'll be advising at this point is that we remain very, very patient to see how price action is going to play out today. So for me on this one, it's very, very likely for me to take any trade on a long term here on the GBP card for today. So I want to see how price will play out today, and by Monday we should be able to have a clearer picture of where price might be headed. So one possibility is this. The first possibility is this, and before I say that, remember I always mention how it is very, very sensitive when price action is around the trend line. It could be a bearish or a bullish trend. Now, when price action is around the trend line, it's always very sensitive. It's a very, very sensitive area, as we want to wait for serious confirmation before we want to join the rally or the decline. So what we want to be looking out for at this point, the first scenario is that we could be having a breakout of structure. That is, we have an engulfing candle strike right through that structure, taking out all the selling positions at that point. Then that gives us a signal that we might be going bullish. And also, we have a channel already, and that's also a breakout of that channel, giving us a signal that a bullish potential is very, very imminent. Then remember, we don't want to get too excited at the sight of a signal, as we want to wait for price action to come back and do a retest of that structure to give us further confirmation that we are actually going bullish. So I want to price action to come back on lower time frame, give me a retest of the structure. This could be a double bottom structure, it could be an inverse head and shoulder pattern, whatever reversal pattern that is. Then I want to join the rally continuation from there. So that's the first scenario I'm going to be looking out for. And then the second scenario could suggest that this is probably a false breakout. And then if that's going to be the case, then we want to see price come back down below that resistance level and also down that bearish trend line. And then if price comes back down, then a retest of that bearish trend line on our lower time frame should give us further confirmation that we are actually going bearish on this one. So let's see how price action is going to play out. And another parameter that's going to be of major help in helping us to make our decision here is this bullish trend line that we were able to identify during the course of yesterday. And this bullish trend line also is something that we should be looking out for. And we also we can see that price is right above that bullish trend line, which is more or less a breakout of that structure, giving us something that looks like a reversal pattern. If I will show you, let me show you what I mean here. We saw price respected that bullish trend line here. We saw it break down that bullish trend line, respect it. Then we saw another breakout of that bullish trend line. So it's likely going to be a reversal pattern if we see a significant breakout of structure, retest of structure, pushing price to the upside from there. So this is the scenario we are looking out for. And if price breaks below that bearish trend line, then we want to be looking for a bearish opportunity. So this is more or less a very, very sensitive area we need to be very conscious of. So CCU Star is asking about GBP card. I hope I've made myself clear here. So let's see how price action plays out for today, and let's see if we have opportunities on lower time frame. I don't know if you're a scalper or a short-term trader. Let's see if we have opportunities. So let's go down to a much lower time frame, like the 15 minutes time frame. So on the 15 minutes time frame, well, it is very, very obvious that on the 15 minutes time frame we have a uptrend scenario. Price has been moving bullish, and one thing we want to see here, remember we have this bullish trend line here, the dotted green line on your screen. Let me wave it so you can see what I'm talking about. Hope you can see it. So we have this bullish trend line here that has been holding price action since the beginning of the week, I guess. And for me, because of this is likely going to give us possibility that we could be having a bullish potential. And let's see, this is the bearish trend line on the daily time frame. And one thing for sure we have here is that we already have a significant breakout of that bearish trend line, which is more or less a signal that we are going bullish. And one thing we saw here is that price has come back to do a retest of that bearish trend line. And in fact, we had multiple rejection of that bearish trend line in the form of a reversal pattern. Then we have a breakout of that structure, giving us a clue that this is more or less going to be a bullish potential. Then we are waiting for a retest of structure to join the rally to the upside. So let's do this. Let's clear this one now, and let's have a clean picture. Then let me show you what I just explained to you. Let me zoom in closely into the structure we have here. Since we are right above the very trend line we identified on the daily time frame, so we have a demand zone here. We have a demand zone here, which gives us a double bottom structure. Let's label it for the sake of clarity. So we have a double bottom structure, and then we can call it a reversal pattern. from a technical perspective, that's a reversal pattern. And remember, our double bottom structure is not complete, not until we see a breakout of the neckline. So we need to identify a neckline here. So if we look left, we can see that we have a structure here. And hold on a second, we have a structure around here, around the 1.5600 area, which is also a very significant level. So we have a structure here. Let's give this a gold. So 1.56 level. So we have a key level sitting at 1.56. Key level at 1.56. Am I correct? Yeah, 1.56. Yes. So let's place it at the top of the neckline here and on the right hand side of our screens for the sake of main visual clarity. So this is what we have here right now. So we saw this bearish impulsive move to the downside. We saw a reversal pattern here, and then we've seen a breakout of that structure. So one thing we want to be waiting for is price to come back and do a retest of that key level at 1.56 area, after which we want to join the rally to the upside from here. So let's see how price action plays out during the course of the New York session. However, if price does not come back into the 1.56 level, what do we do so that we don't get too confused when price? So if you scale down to a much lower time frame, like your 1 minute or 3 minutes time frame, just look out for a reversal pattern here. You see, if price does not come back down, you can look out for a reversal pattern around this area to join the rally to the upside. So what you are looking out for is just a reversal pattern, either reversal pattern right above the key level, the neckline we identify, or probably price comes back to retest that level, then you can now join the rally to the upside. So on the GBP card, our perspective have shifted to a bullish momentum here. And if we are taking a bullish momentum, where will our take profit target be? Well, the last time price touched this bullish trend line was at this point. And if we have price touch the trend line at that point, then that area is the beginning of the impulsive move to the upside. Then we want to project this impulse leg into the future to be able to identify our take profit target. And if we do that, we want to be using our Fibonacci extension tool with the aim of the region between the 127.2 and the 1414 area. So if we bring out our Fibonacci extension tool and run it through that impulse leg, then our take profit target should be falling right between the 141.4 and the 127.2 area, which is around the 1.57 and 1.573 area. So let's label this one the TP target. So we have our TP target right around that area, and then let's place it right inside the center of this box, and there we go. So we have a take profit target around there, and that should dovetail to about how many pips that is. That's around the 110 pips to catch here if price moves as expected. So this is the scenario we are looking at for here on the GBP card. So if you are with me here on this one, then let's see how price action plays out, and I hope I've made myself cleared so far. So CCI USTech, okay, hope you understand. Hope there was any questions whatsoever. 356, good afternoon. Okay, all right. Can 786, we already attended to UsOil, but if you don't mind, you might want to stay back and let me quickly run through do a recap of what we talked about so far. So let's move on to do a recap of what we have talked about so far. The first pair we deliberated on today was the UsOil, and on the UsOil, I told you how much you should remain patient and we want to wait for structures to give us that signal. Well, we have three scenarios here on the UsOil, and the first scenario is that if we have an outright breakout of this bearish trend line, then we'll wait for a confirmation in the form of a retest of that trend line or the structure here and look out for patterns to join the rally to the upside. Then we also had the second scenario where we expect price to come back to do a retest. before that, we have a reversal pattern here, and we have a neckline right here at $97.50. So we expect price to come back and do a retest of this neckline to confirm the reversal pattern, and might also test this bullish trend line here before we now look out for patterns that support a trending continuation from here. Then the other scenario, which is more or less bearish, that is if price actually breaks down that bullish trend line, then the retest of structure could send price crashing to the main demand, the main bullish trend line we identified on a higher time frame, after we should be looking for that bullish potential. And if that happens, I said we should just hold on for that bearish momentum to end so that we can join that bullish buyers, because I'm still expecting a bullish buyers here on the US oil, and when it will happen is what we don't know. So that is why I have explained to you different scenarios that we can be using to guide our action. Then where will our take profit target be? Our take profit target is going to be around the $103 area and the $105 area, and the reason why that is, if we look left, this area has been a major determinant of price action. It has been a selling niche for sellers at this point, and it has been a demand niche as well. So one thing I want to be saying here is there's a likelihood that price might fall from this area, and if it does it, we could have a breakout of structure. A retest could give us further confirmation to join the rally to the upside. So that is that on the US oil. Then we went on to talk about the UK oil, where we also had a similar scenario, which I'm expecting a bullish momentum here on the US oil and on the UK oil rather. So we saw this impulsive move during this morning, and a huge engulfing candle that took price right back into the major key level at $104 mark, and you can see how price has been relating to that level. You can see multiple rejection of that level, giving us a clue into the strength of that level. You can see how it has been respected too in the past. So this is more or less a very significant level to watch out for, as a reversal pattern right above this level should give us further confirmation that we should be going bullish. However, if price breaks below that level, then we want to hold on for that bearish momentum to end, and then look out for a reversal pattern to join the rally to the upside. Then we went further to the 15 minutes time frame to look out for how the structure has been. And one thing I was able to do here is to identify this level at $104.20, where I said we should wait for price to break above that level. Then retest of that level should give us confirmation to join the rally to the upside. And if we continue to see price oscillate right below that level, then definitely we know that the bearish move appears to be the order of the day. So we might be seeing price crashing to the downside from there. So that's the scenario we are looking out for on the UK oil. And then we moved on to talk about the GBPUSD, where I'm still expecting a bullish momentum here on the GBPUSD. And I was able to identify a buy zone around the 1.207 area and the 1.21500 area, and I said we should expect price to come into this level to do a reversal pattern, after which we look out for structures to join the rally into the upside from there. And another thing I made mention of here is that if price does not go that far, that is, price does not come down to this level, then we still have a level around here that we can also look out for on our lower time frame. As long as we see a reversal pattern around this area, we can join the rally. And the reason why that is because we already have a breakout of a level that has been a supply niche in the past, and then this move to the downside appears to be a retest of structure. And if we can see a reversal pattern here on our lower time frame, it could be your 15 minutes time frame, whatever that is, look out for a pattern on lower time frame, then you could join a rally to the upside from here. So my expectation on the GBPUSD remains very bullish, with the take profit target sitting around the 1.23 and 1.233 area, which will dovetail to at least a minimum of around the 150 pips move, and this is dependent on where you are entering your position. So the next pair we also deliberated on is the gold, and on the gold too as well, I'm still expecting a bullish momentum on the gold. I told you how we could take advantage of that. The first scenario we want to be looking out for is price to break above that trend line, that bearish trend line. If price breaks above that trend line, that is a signal. And remember, we are not getting too excited at the sight of a signal, as we want to wait for price action to come back and do a retest of structure. It could be a retest of this bearish trend line, it could be a retest of this bullish trend line here, and we look out for patterns on lower time frame that will support a trend continuation to the upside. Take profit target still remains around the 1800 1810 area. We look out for our profit there. Then the other scenario we want to look out for is that there's a possibility that price could break down that bullish trend line. Here we could see price break down that bullish trend, and if that happens, then definitely we should realize that we're about having a momentum shift, and this could likely be a retracement of the previous impulse leg. Remember, we have an impulse leg here, and it's very likely that price would do a retracement into our golden zone area, after which we look out for reversal pattern to join the trend continuation to the upside. So for me personally, I will be waiting. If price breaks down that bullish trend line, I want to wait for price to come back into my bullish trend line and wait patiently to see a reversal pattern so that I can join the bullish trend continuation. However, for those people who are comfortable doing reversal counter trend trades, then you might want to take advantage of a breakdown. You wait for your confirmation, that is a retest of structure on your lower time frame, then you could join the decline to somewhere around here. I think it will catch you about 1500 pips if price moves significantly well in that direction. So that is that on the XAUUSD. Then we went on to close the day with GBP card, which I was able to explain to XAUUSD how we are actually looking for a bullish momentum here after we scaled down to the 15 minutes time frame, where we saw a reversal pattern already evolved. And one thing we are saying here is that we want to wait for price action to come back into the neckline, which is also our key level at 1.56 area, where we are going to be looking for a reversal pattern to join the rally to the upside. However, if price does not come that far, then we want to be waiting for price action to form a reversal pattern anywhere right above that key level. It could be on your 1 minute time frame or your 3 minutes time frame. Let's look out for a reversal pattern here, and if this happens, I think we're already having something that looks like a reversal pattern here, but I'm not sure how this last candle is going to close. If this candle breaks above and then we see a retest of structure, we can't actually join the rally to the upside. And if you are privileged to have the leverage of having like a 40 pips stop loss as your take profit as your stop loss target, if you can afford that, then you can actually enter at this point and then have your take profit target at where was our take profit target being? Take profit targets around the 1.570 and the 1.573 area. That's where we are aiming at, which will dovetail to at least a minimum of, let's say, 90-100 pips to catch here. So let's see how price action plays out on this one. And I told you here that if price at any point in time breaks below the key level and comes down below that bearish trend line we identified on the daily time frame, we might be looking forward to a bearish move, and that could be next week. So this is what we are looking out for the New York session today, and I think I made myself clear. We were able to deliberate on 1, 2, 3, 4, 5 pairs today, which is quite a ton of opportunities that we could be leveraging on during the New York session. So it's been a wonderful moment with you guys. I really appreciate every one of you guys, and I look forward to seeing you same time Monday morning to start a new week, a new month on a good note. Same time, 11 a.m. West African time, 10 a.m. UTC, and I wish you best of luck today and a wonderful weekend. Bye bye.